Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike York. Today is Monday, June 15th, halfway through the month. Hey, we got a few economic news releases to go over today. We'll start off with the Empire State Index for the month of June. And what that is the manufacturing numbers for the New York region. So last report back in May was 3.1, and it was supposed to increase to 5.7. That was expectations. And as you can see, it contracted at negative 0.2, or I'm sorry, 2.0. So this is obviously a contraction, so anything above 0 is expansion, anything below becomes a contraction, which is obviously a contraction is not a good thing, so it's pulling back on any progress towards the economy. Industrial production for the month of May, also not so good. We had a negative 0.5% back in April, and it was supposed to go in positive territory in May, and it still stayed in negative territory at 0.2%. So obviously not too good in the manufacturing areas, industrial areas. On the other hand, we got the capacity utilization at a 78.3. It was supposed to forecast the same in May, and it dipped a little bit. So as we can see, not so good news there. On the other hand, we do have some positive news with the NAHB Home Builders Index. This is the confidence levels that the home builders have for the housing market. So anything above 50 is they figured to be expansion. So we had in May 54, and it was supposed to increase slightly, and it jumped up to 59. So a little bit better, a little bit more positive news to end that. Remember, tomorrow we'll start off with the FOMC's two-day meeting. They'll begin their meeting tomorrow, and then they'll give their announcement. And so be prepared, a very wild day for the next 2 days regards to the Fed, because this will be the first time that they may put the rate hike on the table. This is so they're going to be looking for any possibility of any clues as to when they might actually hike interest rates. Right now, most bets are on around September time frame for those. So some of the numbers we begin in the first half, a lot of analysts are projecting better second half versus first half numbers. So that could play into part where the Fed may keep that in mind as well. They may have the same numbers and look at possibly raising rates in the second half versus 2016, where the IMF, the World Bank, and some of the other leaders are trying to urge them to wait till 2016. Stock market is currently down. It was actually down as much as 160 on the Dow, and since then, over the morning, it's kind of pulled back a little bit. I think the confidence level on the home builders kind of helped improve that a little bit. So right now, it's just under 100 so far. There's also another big thing is the concerns over the Greek default. Over the weekend, they were meeting with creditors, and basically those talks went to nil. So this could bring us all the way to the June 25th European meetings and stuff, and could come to that conclusion. So it's not looking too positive right now, but in any case, we don't know. We keep having these back and forth type of things, seesaw events. So as to which way to go, it's hard to say. We don't know if they even really have the money to make the payments or not. So it's hard to say. At this point, you could be looking at banks, like the central bank maybe cutting off their funds being funneled into Greece as well. So they don't want to keep sending money into them if they're not going to be making repayments. Bond market, we went up today, so we had some positive territory here since the morning, since the stock market came down a little bit. Some of that money kind of flowed back into the stock market. As we said earlier in the morning, it was 160 down. Dow was down 160 and pulled back to just under 100. The bond market was up further and pulled slightly back a little bit as a result as well. But we're still above where we left off on Friday, hence giving us a little bit better pricing for Friday. We'll see if this continues a trend, if it continues to improve on the stock market. The stock market still continues to improve. We might see the bond market coming down and may get pricing for the worst later on today. So watch to see where the stock market is, and we'll kind of get our clue for where the bond market is today. But right now we have a little bit better pricing than where we left off on Friday. So we'll see a little better interest rates today. All right, but again, watch out for this week. We'll have some volatility. The Greece will be definitely on people's minds, but more importantly, locally we'll have the Fed meeting coming up, especially by Wednesday. We'll have our announcement by 11:15 Pacific Standard Time when Danielle will give her announcement. All right, you guys have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Take care.